Hello and welcome to 3.0 TV. I am Vishakha Thakur. The crypto market is facing significant regulatory changes, with Bitcoin recently dropping below $82,000 in a flash crash, but analysts still predict a rally by year-end. Well, as the US Senate prepares to vote on the crypto market bill and oversight potentially shifts from the SEC to the CFTC, there's growing anticipation about how these developments will impact the market. So to understand the dynamics, we have with us Mr. Christopher Perkins, President of CoinFund, a leading crypto investment firm. He brings unique combination of experience as a former US Marine Corps commanding officer, former head of derivatives intermediation at Lehman Brothers, and managing director at Citigroup. He also advises the Commodity Futures Trading Commission, CFTC, as a member of its Global Markets Advisory Committee. So welcome to 3.0 TV, Mr. Perkins.
Thank you for having me.
So it's a pleasure to have you with us today again. And to begin with, can you give an overview of the crypto market and what exactly is happening at the regulatory front?
Yeah, we have a bit of a drawdown going on, and I think there's a few things going on in the market.
Right.
Bitcoin is off around 30% from its all-time highs. As I see it, it's part of a greater restructuring of the markets. I call it a flippening.
Okay.
Where it was largely dominated crypto by retail investors in the past. Some of those retail investors were burnt a bit in what we call 10/10 or Black Friday, when there was a pretty material idiosyncratic liquidation across the perpetuals market. And so as retail ebbs and flows, and I think retail is ebbing, you're seeing institutions continuing to march forward. And so during this transition, we're seeing some weakness. On top of that, there's some macro weakness, obviously, with some indecision amongst what's going to happen with the Fed and its rate cutting in December. Just a couple minutes ago, it feels like there's a higher probability that there may be a Fed cut. And we find that crypto is very, very reactive to interest rates. So generally speaking, we've seen consolidations like this in the past, and they've oftentimes been followed by really positive market action. So I feel like the setup is actually very constructive. I haven't seen retail sentiment so negative in a very long time. And at the same time, institutional sentiment is very strong. So against that backdrop, I do think it's a very constructive setup currently.
All right. So retail sentiment is negative, institutional sentiment is strong. At the same time, the market is anticipating that there will not be a rate cut in December. And we also saw Bitcoin recently dropping below $82,000, like you also mentioned. But analysts like Jeff Kendrick from Standard Chartered suggest the sell-off might be over, with the rally into year-end still possible. Do you agree? And if yes, what factors will drive this rally?
Yeah, so I agree with Jeff. I do think that this is oversold, particularly in the crypto space. And again, as macro conditions continue to crystallize and improve, I do think we're in a rate reducing environment that's going to be healthy for price action. And then against that backdrop, people forget how different the policy and regulatory climate is from just a year ago. And what we're seeing real-time legitimacy of the asset class. It allows institutions to come in because no longer is this a fringe asset. It's a part of the financial system, and that is going to lead to longer-term growth and adoption. This is inevitable from my perspective.
Right, that's interesting. And we recently saw that US Senate Banking Committee is expected to vote on the crypto market bill, the Clarity Act, as we say, next month. So what kind of regulatory clarity do you expect in the coming months?
So the Clarity Act, or the RFIA, as it's called in the Senate, is not an easy piece of legislation. We saw with the Genius Act, that should have been pretty easy. In the end, it wasn't. It's very difficult to get laws passed in Washington, D.C. And there's a couple of things that will really need to be addressed. I think DeFi remains very much an open policy issue, along with some conflicts of interest. But of course, like when I talk to policymakers, and I do, I say, look, there's conflicts everywhere, much bigger than just the crypto asset class. So why don't you just deal with that holistically? That said, I'm actually bullish even if we don't get a law passed. Why? Is because we have two regulators right now in the United States, the CFTC and the SEC, that are actually working very constructively together to bring forth the best policy outcomes in the context of the laws as they exist today. And so, either way, whether we get a law or not, I do feel like the conditions for greater mainstreaming, greater institutional adoption are going to happen inevitably.
Great. So you say that even if the law does not get passed, the US SEC and CFTC both are working very hard for, taking this particular asset class to next level. And now we also have a bill unveiled by 2 US senators, which shifts crypto oversight from SEC to CFTC and classifies most digital assets as commodities, impact crypto firms. And how would market structure, liquidity, derivative, spot trading differ under the CFTC regulation?
Yeah, so in a way, it doesn't matter so much because, look, I know Mike Seelig, and he went through, he passed the committee hearing vote for the Agricultural Committee yesterday. He's going to go to a full Senate vote. Both he and Chair Atkins, unlike the past administration, are less focused on who owns the asset, and they're much more focused on the principles that will make the asset meet its full potential, and doing so balances both customer protections along with creating the conditions to let entrepreneurship and innovation thrive. And so, yes, we're going to see whether it goes to the CFTC or SEC. We believe that most of these assets are indeed commodities. Even the SEC chair has said that. But at the end of the day, it really shouldn't matter anymore because it's about the principles. If an asset is a security, now we're going to have a roadmap under Chair Atkins that allows that security to thrive. It's no longer a death sentence. So, by and large, I'm very, very bullish on the policy outcomes, and that's going to translate to downstream value. I mean, anytime you look at policy, one single word, one single sentence could translate to billions and billions of dollars of downstream value creation or value destruction. I think with what I'm seeing now, it's going to result in value creation, and I'm very excited about it.
Great. Now, since you mentioned about Mike Seelig, if he's confirmed as CFTC chairman, what immediate steps do you think he will take in his first 100 days?
Yeah, so there's a lot of really interesting issues that he is going to face. From a crypto perspective, I think nailing taxonomy is going to be very important. And what does that mean? It means what's a security and what's a commodity. And if we have clarity around that under the existing laws of the land, we'll be able to navigate and give market participants, clarity, just like the legislation is supposed to deliver. So taxonomy is very important. But he's also going to be grappling with other very important issues, things like prediction markets, which are taking our markets by storm. Very, very exciting time to be in that market. We just saw Kalshi today announce another raise and pretty amazing valuation. You have Polymark out there as well. So there's plenty to do there as well. So yeah, he has a lot on his plate, but he's the type of guy who understands how to balance the principles of both customer protections and how to create those conditions for entrepreneurs and innovation to thrive.
Great. Now, coming to the Genius Act, with Genius Act proposing to bring stablecoins under Treasury oversight, Anderson Horowitz call for exemptions for decentralized stablecoins could create regulatory friction. So how does CFTC navigate these complexities in its crypto sprint initiative?
Look, I think stablecoins are going to be bigger than even the very, very robust projections from the Department of the Treasury. Our Department of the Treasury has said that stablecoins could be as much as $3 trillion in here in just a couple of years. I think it's going to be much bigger. Why? Because I see equity markets tokenizing much quicker. I see fixed income markets tokenizing much quicker.
Right.
As a fiduciary, if I'm given the choice of trading a tokenized asset or a legacy asset, assuming they have liquidity, I have to trade the tokenized asset because I have to be able to risk manage it on the weekends and nights. How am I going to pay for that tokenized asset? Well, I'm going to pay for it in stablecoins. What the Genius Act has done is it delivers confidence to market participants that these assets are regulated and backed, which is a very, very important thing. And so, when you think about iterations of stablecoins, you'll have compliant Genius stablecoins, and you'll have non-compliant assets that are not truly stablecoins. I personally think that migration of liquidity is going to be amongst those Genius compliant stablecoins because it gives market participants the comfort and the confidence that these are regulated assets and fully backed.
Interesting. And how do you see the upcoming year 2026 in terms of VC funding as compared to 2025? Where do you see CoinFund placing its bets? Are there any emerging projects you find particularly exciting?
Yeah, I mean, there's incredible innovation happening across the board. What we're seeing now is this regulatory de-risking is both attracting new capital, professional institutional capital. It's also attracting a new class of entrepreneurs. There's about 30 million 30 million developers in the world, and unfortunately, many of them have had to stay on the sidelines because they're very concerned about the liabilities they would face.
Right.
They don't want to go to jail for building in the crypto space. And unfortunately, that was the reality in the last few years.
True.
Now, with that clarity that we're seeing, it gives them the confidence. So on one direction, you have new innovators coming in, entrepreneurs, you have new capital coming in. So it could be a golden age of innovation. We see exciting things happening from derivatives markets to fixed income markets to the consumer side. It's hard to focus on just one certain vertical, but we're seeing innovation across the board. And it's an exciting place. Despite whatever recent market pullbacks you're seeing, if you zoom out a little bit, it's a very exciting time to be in crypto markets.
All right. Great. Thank you so much, sir, for joining us today and sharing insights on where the market is headed, what is coming next, and of course, the regulatory part of it, the CFTC's next actions and SEC CFTC working towards the digital asset class. It was wonderful having you with us today on the show.
Thanks again. Thanks for having me.
So that's all in this special interaction with Mr. Christopher Perkins, President CoinFund and CFTC Advisor. Keep watching Free.TV for more such interactions and do log on to our website www.3versetv.com or scan the QR code.